Mcleod Russel now. They also declared numbers earlier. Mr. Baheti, CFO at Mcleod Russel, is now joining us. Mr. Baheti, can you talk to us about your results? How generally Q1 is? It's a very seasonal business that you have. Is Q1 one of the strongest quarter?
In fact, Q1 is very marginal for us. If you really look at the broad numbers in the Q1 itself, the biggest plus point had been that the prices are up by around 16 rupees per kg as compared to last year. And this kind of price increase reflects into the profitability into the second and third quarter, which is our main quarters. Fourth quarter in any case is again a loss quarter. So I think the broad numbers are that the production is in line. The prices are up by 16 rupees per kg as compared to last year, which is around 8 to 9%. Even if there had been some increase which has happened in case of wages, which is because of the revision of wages, I think the trend on the prices is the clear indication which should really reflect in the second and third quarter.
So in FY18, if I'm not mistaken, your volumes were completely flat. What is the outlook ahead that you can give us? What's the guidance for FY19 looking like to you? Can we expect a slight growth as far as the volumes are concerned, and what's the margins that one can expect?
In fact, if you really look at last year, there had been an increase of around 3-4 million kilograms in volume terms. But the volume is basically will remain flat because the areas and the tea plantation remains the same. It is only on the weather conditions that we see some fluctuations as far as the volume is concerned. The main play is actually on the prices. The prices we had seen even last year, the prices went up around 10 rupees per kg. But that was not good enough to really take care of price increase in the margin expansion. This year it looks like that the price increase is expanding, and this expansion should really happen in the third and fourth quarter as well, which should really expand the margins. So I think this year as a whole looks similar as far as volume is concerned, but should really definitely be looking at a better margins this year on prices.
Right, just in terms of prices, what you pointed out that in the first answer was that prices are higher, and going into Q2 and Q3 realizations would be better. So what do you expect? You expect realization to surprise positively?
If you really look at the overall production till date in India, we are down by around 15 to 20 million kilograms as compared to last year. Even if there had been some impact on exports because of higher production in Kenya, we believe with consumption growth as well as the drop in production should see price increase happening even further. Our base idea is that for the full year we are looking at around 20 to 25 rupees per kg. First quarter had been 15 rupees. These are very small volume quarter as compared to second and third quarter. So even if the price remains in 15 to 20 rupees higher range, the profitability impact should be higher because of the volume, which is the maximum in the second quarter and third quarter.
Right, just quickly, can you tell us FY19 will be better than FY18?
On margin fronts and overall profitability, we expect this year to be better as far as India is concerned. On a consolidated basis also, we are looking at a total overall EBITDA growth of at least 15 to 20%, because overseas had been a little soft on prices, but India had been very strong.
On that note, we'll let you go. All the very best for the performance in the rest of the quarters that are there in this current fiscal.